Difficult conditions are causing issues for operators in several well-established cannabis markets, including California, Colorado, Oregon, and Oklahoma. Wholesale flower prices are declining, and oversupply is magnified by stagnant consumer demand. As a result, a lot of operators are struggling to make ends meet, and we're helping many clients implement financial and operational strategies to protect their businesses. In this video, we'll walk you through several common scenarios and solutions that could be the key to helping you lower overhead and maximize revenue. Before we dive in, be sure to like this video and give us a follow so you don't miss any cannabis business educational videos. And don't be shy in the comments. Let us know if you're navigating any issues we can help with. A recent study by Business Insider found that 82% of small businesses fail due to cash flow issues. The other top reasons are also connected to cash flow. 79% fail due to a lack of startup money, 78% fail due to an insufficient business plan or operational model, 77% fail due to unrealistic product pricing strategies, 73% fail due to inaccurate estimations of sales, operating costs, and profit margins, and 70% fail due to an unwillingness to recognize or accept operational or financial failures. That may be hard to hear because a lot of businesses are navigating more than one of these issues. Ultimately, they all boil down to a lack or misuse of money. So most of the strategies we are going to address will be focused on overcoming cash flow issues. The first step in developing and implementing a strategy to survive difficult times is to take a step back and take a fresh, objective, and open-minded view of your current situation. This may be difficult for a lot of operators, but for many, you're so deep it can be difficult to see the big picture. Some important questions to ask are, what is the root of the problem? Is it low sales, an inability to turn a profit, mounting debt, operational struggles? Try to objectively isolate the key issue and go from there. It is likely a web of small inefficiencies building toward a major issue. You start by identifying the key problem and working backwards from there. Is this problem temporary or long-term? Once you've identified the root issue, it is likely cash flow related. You need to understand whether this is a short or long-term issue. If you are confident it is a passing phase, small financial and operational adjustments may be enough. But if the problem is widespread, it may be time to consider major shifts. What are the low-hanging fruit? There are likely to be some fast and easy immediate steps you can take to improve business performance. One of the best ways to identify and implement these changes is to talk to your staff and customers. They will often have some good and many bad ideas about how to improve your operations. Survey them and get their input before making any major decisions. This is an obvious solution but must be addressed at the outset. At its root, profitability is a simple equation of money coming in minus money coming out. The first step is making sure you have clear visibility into the situation. Are you producing financial statements that clearly demonstrate cash inflows and outflows? If not, you'll need to implement this as soon as possible, or are you working in the dark? Once you've got reliable profit and losses statements, chart of accounts, and general ledger, you can identify the areas dragging down performance. Common issues and solutions include the following. Real estate costs. In cannabis, this can be a major pain point as gaining and holding property is often an uphill battle. With changes to operating environments due to COVID-19, you may be carrying more space than you need. Review your office space in any locations to see if you need them, and if not, explore ways you can dispose or optimize them. Selling unused parcels of land can provide a quick capital infusion, and there may be opportunities for sale, leaseback agreements. It may also be possible to rent out unused office, cultivation, or manufacturing space, delivering a new revenue stream without losing access or ownership of the space in the long run. Staffing costs. If sales are down, it is likely you'll need to adjust staffing for retail locations and/or trimmers and other skilled workers. It is relatively easy to conduct a sales analysis to identify slow times or days. Roll back staffing on these days and you'll see a big decrease in operating costs. There may also be opportunities to outsource certain functions rather than pay full-time employees. Things like marketing and accounting can be outsourced cost efficiently. Utility costs. Some simple cost-saving measures may help decrease costs related to electricity, water, and gas bills. If you're operating a light deprivation cultivation operation, there are likely many strategies you can employ to limit or optimize light usage. Marketing costs. The value of marketing must be tied directly to return on investment. You may think it is necessary to advertise on the major maps and other channels available, but if you're not seeing return, you're just wasting money. Take a hard view at your marketing budget and outlays to identify possible cost savings. You don't want to kill your marketing, but if it's not paying for itself, it isn't worth it at this difficult time. These are just a few common examples of low-hanging fruit that can help immediately lower your operating costs and boost your bottom line. As we all know all too well, cannabis taxes are one of the biggest burdens cannabis operators must navigate. Despite knowing this, all too many cannabis operators do not take a proactive approach to tax planning and are potentially losing tens of thousands of dollars each year. To truly optimize your tax approach, you need to be thinking and planning for tax compliance year-round, not just when tax season looms. With a proper tax strategy, you can get and pay tax estimates ahead of time, so you're not hit with surprising tax bills, and you can properly allocate cost of goods sold or COGS to lower your overall tax bill at the end of each year. This takes some time and effort to implement, but the cost savings are truly impactful. It is recommended you consult with a cannabis-focused tax professional to implement and execute this properly. This is a long-term solution to surviving in the cannabis industry. The benefits of vertical integration are many. By owning more of your own supply chain, you gain many cost efficiencies that can lower overhead and operating costs. Additionally, adding new verticals will bring in new revenue streams that will help your company weather difficult market conditions. And finally, diversifying your operational structure also opens up opportunities for tax savings. For example, business deduction rules for 280E are much friendlier to cultivators and manufacturers than they are to retailers. Developing a manufacturing operation may allow you to allocate and deduct costs, improving your tax position. Implementing this strategy is very contingent on local regulations, licensing requirements, and access to capital. The simple fact is, we often find operators not fully utilizing the licenses or capabilities they already have. For example, in helping turn around a vertically integrated client in California, we discovered they weren't using their manufacturing license. We helped them develop a processing facility that ultimately accounted for over 30% of their annual revenue. Sometimes the answer is right under your nose, and you just need the guidance to maximize it. One of the most common issues we are seeing in the market today is a decline in flower prices in well-established markets like California, Colorado, Oklahoma, and Oregon. When the market is inundated with product, cultivators find themselves in a major bind, spending considerably to do what they do, grow great cannabis, but without a ready market to sell into, or face selling at a loss. With the profusion of indoor and light-up operations, we are no longer tied to seasonal harvest schedules. If you're an indoor grower, it may be smart to roll back operations during certain times of the year. For example, during the fall, outdoor harvest prices consistently drop due to oversupply. This time could be an opportunity to roll back operations and limit your grows or focus on R&D or other projects. This way, you're limiting overhead and operational costs when there's no ready market for product, while maximizing quality and volume of harvest during more optimal times of the year. If mounting debts are killing your bottom line, it is best to take a proactive approach with your debtors and definitely not ignore them. All businesses understand that some money is better than, well, no money. So if you're at risk for defaulting on any of your loans or debts, reach out and negotiate with those debtors. If they're also in the cannabis industry, you'll likely find an understanding person that is navigating the same issues. You can often work out much better terms that can save your business in the near and long term. The same principles apply to tax and regulatory authorities. If you're behind on tax payments, it is best to work with the tax agency to establish a payment plan. You often find they are open to working with you. One benefit of working with a cannabis-focused accountant is they'll have the knowledge and relationship to negotiate with tax regulators on your behalf, and may even be able to correct their mistakes. The worst thing you could do, though, is ignore these debts, as interest and fees will pile up quickly and dig a hole you may not be able to escape from. We're not talking about selling your business. That's a last-ditch effort. We mean taking a cold, hard look at the stock you have on hand and finding the best way to move it, even if that means taking a loss. Think of it this way. If you've invested $10,000 into product you were planning to sell for $20,000, right? But as long as it's on your shelves, you are $10,000 in the hole. Now, if you offer a big discount to move the product, you may only earn back $7,000, but hey, $3,000 in the red is better than $10,000 in the red. This simple math scales up and down with the size of your operation. Simply enough, do what you gotta do to move product. A big sale will provide an immediate capital infusion you can reinvest wisely in paying down debts or buying better products. Naturally, this is all dependent on an effective inventory management system, which we have detailed recently. Navigating the ups and downs of the cannabis industry has been a surprise to just about every operator in every market and vertical. We all know the good times are coming, but only the strong will survive the downturns like what we are experiencing in many markets today. The most important key is to not get desperate or feel helpless. There are many things you can do to turn things around, and there are also experts available to provide new perspectives. In the worst case scenario, undertaking the strategies listed above will improve operations and financials in the event of a sale, helping secure a strong exit. The worst thing you can do, though, is throw up your hands and give up. Then you'll lose everything you've worked so hard for. If you're looking for guidance on optimal operational or financial strategies, or you'd like to get a head start on tax planning, the cannabis industry experts at GreenGrowth CPAs are here to help. You can schedule a free consultation on our website, and we'll brainstorm ideas that will get you on the right path to long-term success. Reach out to us at greengrowthcpas.com or call us at 1-800-674-9050. Thank you so much for your time. We hope this information has been helpful. If you have any questions or want more information, please leave us a comment below. And be sure to like this video and give us a follow to learn more about the cannabis industry.